This conference will now be recorded.
All right, good afternoon and welcome to the Clear Lines training session. I'm your host, Kipp Cohen, here for the next just about 60 minutes to answer your questions about the Clear Lines indicator running on the MedvedTrader platform. This is a twice weekly training session every Tuesday and Thursday. It is geared for the subscribers of Clear Lines or for those that have interest in learning more about Clear Lines as well as the MedvedTrader platform, or if you want to learn more about equity alerts. This is a user-driven training session, meaning your questions are always greatly appreciated. If you have a specific question about Clear Lines or MedVed, you could submit those questions through the GoToMeeting chat feature. If you have questions outside of this session, I'm always available. You can text my cell phone, 972-841-8886, or email me at kip@equity-alerts.com. Thank you guys for being here this afternoon. It is Tuesday, by the way, the 20th of October. And one of the things I wanted to spend a little bit of time on today was talking more about utilizing a moving average as I'm kind of considering it calling it a risk buffer. Maybe, does that sound right? Risk assessment tool. Maybe that's a good word. So as traders, we make a decision based on things that we see on our chart. And we act upon that by either taking the trade or not, or once you're in a trade, determining where your targets are, where your stops are going to be. So the tools that we use are very important in that whole process, that evaluation and ultimately trade process. And so we use a combination of indicators. We use, of course, as the basis, the clear lines. That's the red and green lines that trace each other. They're buying and selling momentum indicators. We use a handful of other indicators, more for helping us see where potential shifts or change in price could occur. So we use a combination of pivots. I use a combination of 3 pivots, a daily pivot, a Fibonacci pivot, and a DMARC pivot. Those are all available through MedVed. I use RSI, and I use Williams %R to help determine overbought, oversold areas. One of my favorite indicators is volume weighted average price, or VWAP, and we use that as a guide to help us determine where stocks may go back to, which is helpful when you're looking for profit targets or for potential turning points where to enter long or short. And then recently, we brought in the addition, started out first with a SMA. I started with a 14-period SMA. And then I shifted to a T3, which is a triple smoothed exponential moving average, a 9-period T3. They're very close, the T3, 9, and the 14 SMA. The biggest difference was, I think the T3 was a little smoother. And then last week we started playing around. We did the we called it the indicator game. We started experimenting with a lot of different indicators on MedVed, and we came across this HMA. And I found the HMA interesting because it does a coloration change from green to red, depending if you're, in an uptrend or downtrend. So I went with, this is so you can use different moving averages. So I wanted to get it as close as possible to my 9-period T3. And the 34 EMA on the HMA is the one that kind of lined up the closest. What I have found is that, something just happened. We just got some sell-off. What I have found is that if you are long, you want to be, oh man, the market just took a nosedive. You want to be trading up above that moving average to be in a safer trade. If you want to be short, you need to be below that moving average. To be in this safer trade, right? If you are trading against that line, that is considered a higher risk trade. Doesn't mean you can't do it, but I started looking at it as this is a risk tool. This is going to help me determine if it's a higher risk trade. Okay, hold on one second. Sorry, CJ was agreeing with my comment. It is, so if you're going against it, then again, it's a higher risk trade. You can trade against it, but you either go smaller position or tighter stop, because if you're wrong, you need to be out. And then if you wait till you get into that beneath it, if you're going short, or above it if you're going long, you can actually have a little more level of comfort and feel that you're in a little safer trade. So I think it's a good addition to what we're doing. I know it's helped me this last week using it. I'm just trying to learn to use it a little bit better. So just like, you can see RCL, it's been running up all afternoon, up, 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 up and away. Now, it actually turned red through here, then back to green, and then just went back to red on that big drop. So if you're, see, here's what I like right in here. If you're looking, this was, now you got a little fake out, but right in here was a good spot to look for a short, because you've got fib resistance, so that's a pivot. You got an overextended move, and then you caught a red arrow, a red down arrow. And then literally that next bar, the thing just took a dive after that red arrow. So we look for the arrows. The arrows are great. Those are produced on the clear lines. They lock in after the interval's complete and don't change. If you're on the furthest right time frame and the arrow pops in, it can disappear until that interval closes. But that actually proved to be and then you had two little down arrows on the half minute. So that was actually a really good spot to get short. And then, of course, once you get the HMA shift, now we know we're in a really good trade, because you've got the half minute, the 1 minute have both shifted over. The other indicator that we sometimes use, we haven't been using it as much as we used to, is the first 15 minute, hold on, the Fibonacci extension of the first 15. And actually, if you go back, you'll notice that RCL, when it peaked out, it got within about a penny of hitting the 200% Fibonacci level of the first 15-minute extension. So you kind of had some really nice confluence right in here that basically pointed out a good inflection point to get short. That was a really good spot. Now, because we kind of just sold off pretty quick, it's a little too late for me to go short. I had a short earlier, and gosh, I had the best spot, I think, on the S&P. I want to point out this trade, and this was just using 1 minute clear lines. I saw this little double top right here. This double top. So we hit a peak. We actually got overbought. We tested that peak one more time, got slightly overbought. Oops. You can see RSI, actually that's Williams, but you can see we were overbought. And then I shorted at 34.67.5. And ended up picking up 10 points on the S&P futures on that trade. Now, I missed a re-entry, which I think would have been right up in here. By the way, also, pretty much as soon as I got in, that HMA shifted to red. So I was we had just gone underneath it, shifted to red, and then we had the down arrow, which was a second down arrow, which is a second, actually technically third down arrow, because there was one here, down arrow here, and down arrow here. So you had multiple down arrows up at a nice double top that gave a really good entry point to get short. So I bailed out. It was down in here, right in here, 57.50, 67.50 to 57.50. I missed a decent little rollover right in here, or the secondary, and it's still going down. Do any of you have a question related to, oh, there's my first question. Could you please show the HMA settings again? Yeah. So I have a 34 period, 0 shift, EMA based on the close, and then it's number 2 is the line thickness, because that I can see it a little more clearly on my charts. So it's 34 period EMA. What I did, and I'll show you how I did this. So I took the T3, which is actually hiding right now. Let me show you the T3. This is a T3 9 period T3. And let me do it on this other chart. Hold on. Let's expand this chart. Let's show the indicator. So what I did is I basically went into the HMA editor. Whoops, that's not what I wanted to do. I got to do it this way. You got to click on the line to do it this way. There you go. So I clicked on the line, and I started experimenting by adjusting, the EMAs up and down to kind of figure out where was it really close to that T3, kind of throughout an extended period. And it felt like the 34 was. The 34 is also a Fibonacci number. I'm always a big fan of using Fibonacci numbers, but there's a WMA, which I couldn't quite get the WMA to line up as nicely. There's an SMA that you can use, which got also kind of close, but I couldn't get it to look as good as the T3, the EMA, which is what we ended up with. And then there's this SMMA, which is also fairly close. The 14 SMMA is pretty close. You could probably do either that or the 34 SMA. I just seemed like the 34 SMA made sense to me. it got pretty close. There's some variance periods in here. Actually, now it doesn't look as close for some weird reason. Oh, I'm sorry. It's an EMA, 34 EMA. That's why. Yeah, there you go. The 34 EMA is the one that got the closest using the parameter for the HMA. That got, to me, that looked like as close as I could get to the triple exponential average. And then the original one that we started with was an SMA 14 period. So here's all three of them together. So you can see they're all three pretty close. It's the thing that attracted me to the HMA was the fact that you got that change in color between red and green. And so I liked that. I liked that it kind of gave me, it just visually, I said, okay, I know if that line is red and I'm short, I'm in a good place. If the line's green and I'm long, I'm in a good place. And that was the thought process when I came across that HMA. The T3, Paul, is a hold on, is a 9 period. It's a 9 period T3. The amplifier is 0.5, which I think is the default. 9 period T3 with a 0.5 amplifier. I tried to play with the amplifier and it just didn't, I couldn't figure anything out with it. There was nothing there that really I felt was beneficial. You could do either the T3 9 period or the HMA using the 34 EMA as the line. Like I said, they're both pretty close. But visually, this is really appealing to me. And I really like that comfort feeling. And I'm using it on my half minute and my 1 minute. I use it on both of those charts. But once you see that, I mean, gosh. So, you know how we trade. Sometimes we'll, like right up here. Okay. So you saw the down arrow up at the top. Let's say you shorted Apple up here, but you were above the HMA. Doesn't mean you can't do it. It just means you better have a stop just above this peak, right? Right above the peak. Limited risk. Once you're down below it, now you can feel a little more confident. You can move your stop down a little bit. And then look what happens. Once that thing shifts and we get underneath it, the thing just imploded and dumped. It's a beautiful tool in helping us. It also, I think, can help in extending a trade longer. There's going to be times where obviously, like right here, there you go, it just shifted back up and it's back in, it's got green. So, and you hit VWAP. So what do? You bail out of your short here, right? I prefer, I like to trail down my trades anyways, manually. And if I get a spike down, sometimes just grab off the spike, because usually by the time it turns back up and you get some kind of shift in indicators, you've already missed, you've given back a lot. Now, you had an up arrow right here, so that could have been a clue to get out. Then you had an up arrow. So you've had a few up arrows. Or if you were looking at the 1 minute, when you had that first up arrow right in here, that could have been your clue to cover that short. Or if you waited till you crossed the HMA and you did it here, then you gave up another probably 10 or 15 or 20 cents of profit. All right. So have any of y'all been using it, and are you finding it helpful? Whether you're using the SMA, the T3, or the HMA, Have any of y'all been using it for the last couple weeks? And if so, what is your opinion? I know a couple people that it helped them tremendously, especially staying away from really, you know, really strong moves. And I'm going to give the example of this beast that we call Jinko Solar. You know, when you get on the wrong side of that thing and it runs, right? Run, 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 run. You don't want to fight it on this stock. And then when it turns red, you can short, 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 short. When it goes back to green, long, 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 long. Goes back to red, short, short, short. Goes back to green, long. Goes back to red. That was a great short. Look at that. When that went red, the next arrow, 84, we'll call it 80. It didn't go back to green until way down at VWAP. Basically, you would have been out at VWAP, right? When it got to VWAP, either when it broke below it and it came back to it, you're out. But you got an arrow right here, up arrow, and then and the HMA, it crossed the HMA right here and touched VWAP. Did you see that? That's how clear this is. Right in here. When it crossed back above and hit VWAP, that's your exit. And then if you go long, it stayed green, green, green up to right through here. You got a little short red. You could have bailed out. Might have gotten faked out through here, and then you had another little short period, and then guess what? Long, long, long. It works great, especially with the half minute and the 1 minute. Those two charts together. I could not see the line turning from red to green. I think it is because I did not have the T3 set up. Well, you don't have to have the T3. You can use one or the other. But you need to make sure you've got that line thicker. I have it set to 2 to see it. But you should be seeing it change back and forth from red to green. Yeah, a thicker line will definitely help you. And let's look at Zoom. So Zoom's been kind of choppy, but look at Zoom this morning. Stayed short. Think about this. If you were short and you saw that you were a red the whole way down, that could have helped you to stay short. That's a 20 plus point move down that HMA stayed red the whole way down. That's where I'm seeing there could be some benefit. You know, when you got something that's just running, it could help you stick with that trade. Or like right through here, goes back up, run, 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 goes back down, run, run, run. You're going to get some fake out spots, and that's what stops are for. The stops are for the fake outs. But, you know, remember, part of the whole way that we trade is that if you're wrong, you get out, and if you're right, you try to ride it as long as you can. So you might hit one or two of those big moves. It goes back to the theory of the 5 outcomes of every trade. You know, if you can eliminate the big loss and you're stuck with just the big gain, the small gain, small loss, and the flat trade, you just need like a couple of those big gains a day out of all of your trades. If you can get a couple big gains, you'll finish your day really strong, right? Think about that. So, you know, not everyone wants to trade Zoom, but if we use Zoom as an example, you know, if you shorted the open on Zoom and then you picked up 20 points, and then you got long through here and you probably got out when that rolled over, you made somewhere between 3 points. You might have made a little less if you waited for this to roll over and turn. Whoops. You might have made a little less, but you still would have made some money, right? I mean, you had to roll over. You know, you ride up a little, you ride down a little, ride up a little. By the end of the day, you might have had a few losses, but if you picked up 2 or 3 of these really big moves, you had a huge day. That's what we're trying to do, trying to capture a couple of those really big moves. You know, I traded NVIDIA a couple times today, and the first trade I lost 53 cents, and then I came back and I got $1.53. So I netted $1 between the 2 trades because I was able to let the winner run and I cut that loser pretty quick, which on NVIDIA, 50 cents is pretty quick. Yeah, that was, hold on. So I shorted right through here. Hold on one second. I shorted right through here as it was rolling over right in here. So it went right below the HMA, but the HMA was still green. And then I got stopped on this bounce up. And then I shorted up here again when it started to roll over a little bit. I had the red down arrow and I gave it a little bit of room and then I wrote it down through here and I had to protect profit. Actually probably got out a little soon, but I picked up $1.50 on that second move. Yeah, now that, yeah, the thickness will make a big difference. But yeah, technically I probably could have waited a little bit longer, but like I said, if I get a good profit, I'm going to protect it, and I had a good profit, so I made up for my loss and some. So the question from Alan is how to use HMA at the start of the day. You know, sometimes it depends. It's going to be harder to use, Alan, when there's a gap. That will. Hold on one second. That will. When you have gaps, it's tougher. But most days at the open, you should have no problem using it. You know, that volatility can definitely make it a little challenging, but if you're seeing, you know, like a wild swing at the open, but we can hold on a second. I want to look at a few stocks from the open on a half minute just to see. Yeah. Plus, you can see it in the pre-market too. You know, so as long as there's not a big gap, it will help you. But the you know, there's definitely something about the volatility that makes challenges. But here's when 4 minutes into the day turned green and you and we got a green up arrow, and you saw the upward momentum. So hold on, let me turn something off real quick. Hold on, my auto scroll is on. Turn that off. Whoops. Yeah, I mean that would have kept you in a long trade. Let's look at some others at the open. You know, the open, we all know there's challenges. WDC, you could have stuck long there. Twilio rolled underneath it and stayed underneath it for the first 7 minutes. TNA was above it and then kind of snuck below and then went up. Then it went back above and stayed up above for a little while. Downtrending on target. Well, target was kind of all over the place this morning, so that was. But just like anything else at the market open, you know, there are challenges. I got to be honest with you. The last few weeks, I've been a lot more cautious trading the open, just because it's been really crazy, really hard to trade. So, if anything, you know, maybe looking at it and seeing it at the open has maybe kept me out of some trades. I haven't really made that decision fully yet, but you know, it works. It works at the open, just like anything else. Yeah, I have not liked the action in the first 20 minutes, 15 to 20 minutes. It's been tough with you know, look at this. You just get chop, chop, chop. And then the spreads have been just obnoxious. Big spreads. There you go. That could have kept you in a good short. The thing is you want to just work with it, play with it, and see if it helps you. Look, if it helps you, puts you in better trades, and maybe helps you stick with something a little bit longer, then it was worth it. If you don't see the benefit to it, if it doesn't help, you know, if you don't, you'll see results pretty quick. If you don't see the results of, you know, in your improvement in your trading, then it's not an indicator you need. That's the way I look at it. I look at it as indicators. If they help me, then I'll use it. If they don't, then I'm not going to use it. It's like I quit using Bollinger Bands because it wasn't really benefiting me, and it was just muddying up my charts. I quit using parabolic stop and reverse because I didn't really feel like it was helping me. It was kind of muddying up my charts. Now, I haven't even thought about this. I wonder how this HMA lines up with um, parabolic. I didn't even think about that. Yeah, it doesn't really quite line up. I'm wondering if you can make. Oops. Hold on. Oh, that's volume. Hold on. I wonder if you can adjust oh, you can do dots below green, dots above red. I wonder if you can match those up somehow. Increment. What does that do? I've never really messed with these to see if you can line them up with something else. Minimum gap percent. Yeah, that didn't do much. Now that's kind of interesting. I mean, I mean, it kind of shifts right around the same points, but not all the way through. Hold on, let's look at that. It's just more crap to look at. Yeah, I haven't, I don't know which ones, I was trying to figure out which one was ahead of the other one, and I don't know. I kind of messed it up, so I have to look and see what the right numbers are. It seems like the hold on, I need to figure out what the default numbers are because I just messed with it. Hold on. Point 2, 0.02, 0.02, and then 0.2, 0.02, 0.02. 0.02 and 0.2. That's actually the correct. Yeah, I don't. It's tough to say. I mean, it was faster down here. You had a shift up right out of the gate. You were underneath most of this way up. But then when it gets into chop, it kind of, it's hard to say. Those lined up pretty close. Yeah, I don't know. To me, it becomes a little too much. But I do like it with the red and green dots. Good. Oh, nice little run up here. Let's see. That was a nice little rollover, and then look at that, right through VWAP and down and back up to VWAP. It's amazing how often stocks will come back to that volume weighted average price. How is Google up? This is one that I don't get. You know, these guys are in a potential antitrust suit right now, and the stock's up 30 points. Does that make sense? Oh, there's a good short. Hits the Fibonacci resistance, rolls over, gets a down arrow, falls underneath, and then dumps. You can use a 2 minute too. You can use a 1 or 2 minute. Depends on your trade style, you know. 1, 2, 3, 1 or 2. I have a 2 on my other window, so I have a half, 1, and a 2, and then I have also have a 10 if I need it. You really want to use multiple monitors if you have them. I need to go back and add that timer in. If you didn't know that, if you go to your settings and then under charts and then charts in general, there's a setting that's called auto scroll to latest after X seconds of inactivity. I encourage all of you to use this setting, whatever, 10, 15, 20, 30 seconds, whatever. What this does is that I'm going to set it to 30. If I scroll back to look back, sometimes you'll scroll back and you'll forget that you did that on a chart. Now you can see that it's in red. The scroll, the little scroll bar turns red when you're backwards. But I've had somebody say, "Oh my God, my charts are stuck. I don't know what happened." And what they did is they scrolled back and they forgot or didn't see that that was red, and they thought their chart had quit moving. And so if you set that timer to whatever 20, 30 seconds, then as you can see, it just pops back automatically. This is one of those things that I love that MedVed guys, you know, they added that feature in later. They're really good about Mike and Jerry, just phenomenal developers and have a great platform. And I find, you know, they just do awesome enhancements, and that was a pretty smart one. All right, we've got about 15 minutes to go. Are there any specific questions right now for me? Any specific questions? Probably what we'll do in the last 15 minutes. I don't like to trade at the end of the day, so I'm not going to do any more trading, but today. But I will. We started kind of on a little adventure in the last session. We were trying different indicators to see if there was anything that might help us. And just so you know, if you need to access indicators, you can either do it by going to main and indicators. You can also right click and go to add edit indicators. Again, the brilliance of MedVed is that there's a lot of different ways to turn things on and turn things off. I think we ended at LSMA last time. I don't remember if we looked at the moving average envelope. Let's use Apple. I don't know how helpful that indicator would be to me. What's a moving average rainbow? That's definitely confusing. That's too much. There's also a MedVed SAR, like a parabolic. I guess they have their own MedVed version of it. Again, I kind of lost interest in using parabolic stop and reverse. Momentum trend. Let's see what that is. Momentum trend. I guess that's these little green. I guess when you got momentum, there's a little green bar up above, whether it's down momentum or up momentum. That's interesting. I've never seen that one before. But see, I don't see much momentum in here, so it's kind of cool. My pivots. Whose pivots? They're my pivots. I don't see anything. Hold on. Maybe there's a setting we have to do on my pivots. Show line prices. I'm not seeing anything for my pivots. I don't get that one. N-line break. Not familiar with N-line break. Looks like a Darvis box. N-line break. Huh. Anybody ever use that one? That's interesting. We use opening range. I like that. I use a 5-minute on my first chart and a 15-minute on the second chart. It's good for seeing those opening ranges. Paint bar. This is kind of cool. This is that custom feature where you can create different notations on the charts. Like they've got preset ones. Price crosses daily pivots. We created one for clear lines arrow and clear lines crosses. This is clear line arrows. Oh, so it lets you see it when you get the little arrows. It tells you up at the top. I don't know. Oh well, you can adjust. Hold on. We're on the chart that top. Full background. Drawn for you. I don't need that. But they have some other indicators on there on the paint bars. We'll have to spend another session just on that. It's been a while since we've messed with that. Percentage trend. I'm not familiar with this one. Percentage trend. Yeah, I don't know about that. We use pivots, price channels. Again, I don't know where that would help. I guess it's just letting you know where the price ranges are, where there's little channels of price. That doesn't seem to help me. Price channels, regression channels. Doesn't Stephen use regression channels? I guess that's this line. That's a regression channel. Those two lines. Anybody use regression channels? Reverse MACD. Interesting. A reverse MACD. Moving average convergence divergence. That looks a little messy. All right. We won't mess with a single regression. We've looked at SMA and SMMA. What's the standard error band? Again, I mean, it just looks like a price range. Don't see any help there. Star C bands. Oh, that's too busy. That doesn't help me. Super trend. Like Super Tramp? It's the super trend. Guess that's that little green. I don't understand some of these indicators. Supply and demand zones. That's something that we actually, Jim had asked for, and we had the MedVed guys create for us. So they create levels of supply and demand. It puts these little bands up with potential buy zones and sell zones. I tested it. It wasn't, Jim uses it. Jim likes it. He was the one that wanted it. We've looked at T3. What is TD Rebo? TD Rebo. I don't see anything on my chart. I don't see anything new. TD Rebo. Oh, not familiar with that one. TEMA, that's another, I think that's another form of an exponential moving average. Like a, kind of like a T3. Time series forecast. Is this going to predict the future? No. It just looks like another trend line. Time ticks. Time ticks. Oh. A little time. Oh, every 30 intervals. Oh, like every 30 minutes. That's what this is. If you want to, every 10 minutes. So you know where every 10 minutes is. That's all that is. That's kind of cool. I don't think I need it. VMA, it's another moving average. Getting near the bottom here. Volatility stop. Yeah, I think we looked at that last week. I didn't see any help there. I guess it gives you ideas where to set stops based on volatility. Volatility trend. Again, looks confusing to me. Volatility price and volatility and volume by price and volume by price detail. Oh, that's interesting. That's a lot of noise on the chart. Volume by price. I think Stephen has used that one. And of course, we use VWAP, and then you can add VWAP bands, which kind of surround volume weighted average price. I looked at it for a day and didn't really care for it. I'm not going to use the VWAP bands. VWMA, again, another probably volume moving average, volume weighted moving average. That's probably what that is, volume weighted moving average. Probably similar to VWAP. WMA, weighted moving average, I'm assuming. That follows pretty close to my my HMA. And then let's look at these last couple. Woody's chop zone. I'm not familiar with Woody's chop zone. Oh, little zones of chop. Okay, that's interesting. Woody's chop zone, Woody's pivots, and Woody's sidewinder. Well, let's put both of those in. Woody's pivots and side. There you go. There's a Woody pivot. It looks like it's on top of one of the other pivots, and that must be his sidewinder. It's very colorful. It looks similar to one of the other pivots. And then zigzag. I don't see anything with zigzag. And then the last one is a ZLMA, another moving average. All right. All right, I'm sticking with what I got. I'm happy with my settings. If that tells you anything. All right, guys, market's about to close. I want to thank you all for tuning in today. If you have questions, you can contact me after hours or after market, any afternoons or after hours. You can email me, kip@equity-alerts.com. You can text or call me 972-841-8886. And of course, I will be back on Thursday at 3 o'clock Eastern. You're always welcome to join me every Tuesday and Thursday for this training session. Everyone have a great evening, and I will see a bunch of you guys tomorrow in the webinar. Bye-bye.